Good morning, everybody. It's Chris here from Serene Education with the 4 majors and notes update for the 25th of September 2013. Hi guys. Okay, let's have a look and see what happened yesterday and what is in store for us today. So, looking at the US dollar on the daily, you can see that price has been consolidated over the past couple of days in particular. Price is now pulled back and is now testing the monthly fib retracement area here at the 1346 and 70 and change. So we want to see price now finding support above here. Ideally, or otherwise, what the other scenario could be, we could end up seeing euro falling even further and taking back all the sentiment we saw just recently to the upside. Very, very important. We know that price is stalled here over a period of a couple of months, and to have last week's news announcement, the FOMC statement breaking higher or making the euro travel higher or break higher, was a significant move for further extensions to the upside. However, if we don't see price actually finding support above here, we will less likely see a kick on to the upside, i.e. moving back up towards the current highs after FOMC, however moving towards our weekly, etc. So from the high of the FOMC to our weekly target, there's a good 160 pips. However, to the next level, which would be our monthly, you're looking at a 265. So there's more than enough profit to the upside. However, it is imperative that price actually maintains above this level. You can quite clearly see we have swing highs, but you can see if we drop down to the 4-hour time frame, you'll notice straight away that that level, the monthly fib plus this trend line, is also in play as we speak. Over the last we're looking at 12 hours in particular, we've seen the euro dropping below the monthly. We've had indecision and then another spinning top. So red arrow, red candles. Our OMO just dropped below the zero, and our MACD has been below the zero for a while as we've been in this consolidative range. So the last we want to see now is a bearish engulfing 4-hour candle. If we do get that, then the outlook is that we're going to see price falling lower and taking away pretty much what we saw the FOMC statement give back to the euro. So we could be heading back towards our weekly low down the bottom. If that is the case, just looking from the monthly to the weekly to the downside, there's a healthy 149 pips. Okay, so we are in the consolidative range. We don't want to be trading now, primarily because we are at a monthly level. You don't want to be speculating. Rather let the market tell us what it wants to do, and then we'll trade the outcome. So be patient. We could have some sort of indication. Look to see if there's any news announcements today that could actually factor in price action. Looking at euro this morning, we had German consumer climate figures, and the figure came out as the forecast, so slightly higher than the previous one. And other than that, we only have the US market news this afternoon. We've got core durable goods orders month on month. We have the durable goods month on month order, and we have new home sales figures, which is a very important one for the US market. Follow that at 3 p.m. GMT. We also have crude oil inventories. So a lot of news out for the US market. Will this actually reflect in price action? There's nothing else this morning on euro that's going to help. We could see that on the US market this afternoon. So just be patient. Next pair is the sterling against US dollar. Here again, you can quite clearly see since the FOMC statement meeting, all we've had is pullbacks. Price has pulled back, is now consolidating at the prior resistance level. Price rallied, pulled back, and then we had the breakout on the FOMC statement, moving into the weekly fib. However, since then, price has notably pulled back and is sitting at a consolidation area. You can notice that the long-term trend is very much up for this particular pair. Swing highs dictates, institution moving average, everything looking fantastic. However, our indicator box over here is looking all over the place. RMO is above, which is a good sign. MACD has been above and is currently green. So it's imperative. Notice the candles, last arrow blue, candlesticks are blue, everything's looking good. However, we have clear consolidation. The last thing we want to do, though, is to making lower swings. If we do that, then we're looking more likely to be bearish. So move to our 4-hour time frame. Let's have a look. We can quite clearly see since the FOMC statement, we have been making lower swings, swing low, swing low. However, we are now coming to the actual prior support and resistance level, and this is happening at the 15. Just around about the 1600 if you want to take a nice round number. RMO is very much still above the zero line. However, consolidating. MACD has been getting far more redder than green, as you can quite clearly see as we've headed higher. There's more red than green, so there's definitely consolidation here. What we do want to see now on this particular pair is a bullish engulfing candle. We do need to see a support here. If we see a bearish engulfing candle close lower, then ultimately we should be looking to the downside, back towards our weekly fib level to the downside, back towards that trend line. And if we see if there's anything else for sterling that could get in the way today, we have CBI realized sales figures, and that we're looking for a slight contraction on that particular pair. So here again, consolidative at a major support and resistance level, bide your time, wait patiently for the confirmation candle, ideally a bullish engulfing candle higher, and then we could tackle the current highs we come from. If we get a bearish engulfing candle, then we should be tackling the swing lows to the downside. Moving on to the US dollar Swiss franc. Here again, you can quite clearly see the US dollar making lower swings against the Swiss franc. And recently we had a nice break of the current support level. That on the FOMC statement outcome. However, like its European counterpart, consolidative at this level and not making any lower lows. If you look at the 4-hour time frame, however, you can notice that the 4-hour swing is now in play. Here's the all-time high after the FOMC statement. Swing low, swing low, swing low, swing low. Sorry, this is the FOMC statement outcome, and price has been consolidative now. Not really moving any lower. If it's not making any lows, then there's more likely to make higher highs. The 4-hour time frame, institution, the 20 and the 50, all in order, above price. We're trading below the weekly as well as the monthly, so still looking negative. And you can quite clearly see that the RMO is below. The only thing we have in our favor, not in our favor, is the MACD, because that's clearly consolidative and it'll show positiveness. So here, testing the consolidation high now. If you look at it, this has been the high point, and you can see the breakout over the past couple of hours, the last 8 hours. If it pulls back and finds support here, going in our smaller time frames, and it comes out with a bullish engulfing candle, then we should be looking upside, back up towards our 50-period moving average, back up towards the institution moving average, back up towards that weekly fib here at the 23.6. So if this is still to remain negative, we do need to see a bearish engulfing candle. If we see positiveness here, then there's more likely for price to pull back in this consolidation range. Last pair there, US dollar Japanese yen. Mentioned last night on our webinar, going into a wedge pattern, still above the institution. Notice all the negativity coming through now on our intraday. The R squared isn't complementing any of that 5, 15, and 30 minute time frame, but on our bigger time frames, the hourly, 4-hour, and daily, very much telling us we should be looking at negativity, and you can quite clearly see the arrows red, candlesticks are red. We are making lower swings. The overall pattern has been making lower highs than higher highs, and we are consolidative. However, the institution moving average is still below price, so we could still use that as our first target. It's used that as a target in the past. That will be our first target if we see price falling lower. RMO below, MACD clearly below. So drop down to our 4-hour time frame. We should be only looking for selling sentiment. There we go. I get a sell on my 4-hour, because you can quite clearly see everything is red and my R squared is complementing that selling. Notice a lot of indecision candles, and the 4-hour candle that's in play right now is negative. Trading below the institution, so our first target would be this current low over here, where we've been to in the past, and that is a healthy 50 pips and change from where we are right now. So look for negative sentiment, look for shorting opportunities for the US dollar against the Japanese yen for the foreseeable future. That's it for today, guys. Short and sweet. Please back this up with sound money management rules. If you are using any of our templates, follow the rules, use it very mechanical in your approach, and you will be far more profitable. Okay, use major support and resistance levels. Keep it as simple as possible. Okay, guys. If you have any queries regarding this particular template or any of our other templates, please email us. We have our email at the end of this webinar. Just look out for it. Oh, sorry, this video. Just look out for it and then drop us an email. Okay, I'm going to leave you with that. Have a fantastic day. Please be aware of any news. Factor it into your trading, guys. And I will see you first thing tomorrow morning. Until then, you guys trade serenely.